Ed Al-Hussainy. Let's talk interest rates, then currencies, because they all go together. And what I want to know is, what's going to happen to interest rates in Q4 with the G4?
All right, starting with Treasuries, I think we start to grind higher at the moment. I think we continue going to about 2% and then start to top out. I think a couple different things driving this, starting with the Fed. It's increasingly likely that the Fed's going to start to move again in December. Odds are about 70%. I think that's about right. We're starting to see a little bit of inflation come through from base effects from oil and the dollar falling out, and then higher interest rates in Japan and Germany, really driven by questions around quantitative easing there. I think that adds up to a picture where rates are getting pushed higher towards 2%. It's very difficult for me to see things move beyond that just because growth and inflation globally just isn't strong enough to drive that picture.
All right, now let's talk about some currencies. Let's talk about the pound. I thought Brexit was enough. That drove the pound lower, but it's moved even lower since then. Where do you see the pound going?
I think it's a very long adjustment process. I think the pound is really the release valve for the British economy. And as we get more details about what Brexit is going to look like, and it's looking like it's a hard Brexit, the pound's going to grind lower. And I expect it to be significantly lower over the next several years.
All right, staying in the G4, let's talk yen. Yen seemed like it bottomed out at around 100 per dollar in September. Now it's about 104. Can it continue to weaken? Maybe 110, 120. Where's it going?
Right, and I'm expecting a weaker yen here. It's happening in a broader context of a stronger dollar. And really, in case of the yen, I think increasing likelihood that the BOJ is going to weaken policy rates, particularly in the front end. I think they've gotten a hold of the 10-year point. They've anchored it at 0%. I think the front end becomes a policy variable that they can move lower.
Well, the dollar is really strengthened against the euro in recent weeks. It's now $1.10 per euro. Will we get to parity? Makes it easier for everyone traveling abroad.
I think there's less directionality in the euro. If anything, in the broader context of a stronger dollar against developed market currencies, I think it moves slightly lower. Parity is a tough technical point to break through. I don't think we're quite there yet. I think we need to see significantly additional easing out of the ECB to get there.
All right, and then finally, what about the world's oldest currency, gold?
Gold. So gold, in many ways, the way I look at gold is it's not really an inflation hedge, but it is an effective hedge if you're thinking about currencies being debased by quantitative easing globally. And I think that's how it's been playing out, over the last year or so. I think at this point it's weaker. I think it's a good point to come in. I think it grinds higher as people lose faith in quantitative easing programs around the world.
All right. Well, thanks a lot for coming on and talking about it, and thank you for watching The Street.